traveled around the world, Brazil, Bangladesh, Botswana, parts of Northern Africa, Indonesia, so 20 countries. Went to the States, did my MBA at Chicago Booth, summers with Barclays and London. Came back to the States, did my MBA, completed it, joined Citi in the States, came back with Citi to India, was product head for prepaid cards for a while, and then launched and operates in the same way. Can you go to the next slide, please? Yeah. So, the way I describe regulation is it's a necessary evil, right? And what does regulation do? It provides rules of engagement. It also provides guardrails. It provides you a framework in which the ecosystem can operate. This is true for multiple industries. This is true for multiple environments. You have competition commissions, which is basically your antitrust regulation. You have environmental regulations. You have capital markets regulations. So every place where there is potential to scale up a business or scale up something, you need regulation, right? So it's your framework on how that particular industry or that particular community is going to operate on, right? The other big piece which regulation is supposed to do is, at least, is to protect weaker sections of the society, folks who may not have the wherewithal to be able to. Giants have had their own set of challenges with China. India is a environment, I would say, which is a hybrid. We have regulation, we have a certain amount of regulation, but I would not call us a over-regulated society. I think we are a fairly regulated society, and you always try to continuously look to optimize. There is no perfect place where you say, okay, this is the regulation that I want for this environment, and we are set. Simply because we live in a VUCA world, right? Everything is volatile, everything is changing rapidly, so regulation has to keep up pace with that. Right? So I'll get into the banking and the fintech space, right? This is a space that I understand. This is a space which is significantly impacted by regulation, and rightly so, because we're dealing with money. What are the key considerations that you see again and again coming in the fintech industry, right? And you'll see, data protection being one of the big concern areas. You'll see that with all new age companies, but more so with fintech. You'll see money laundering and anti-money laundering, terrorist funding, CFT kind of considerations always kick in. You'll see how money is moved, what are the rules around that. You'll also see cyber security. I think a lot of the companies, anything which has to do with tech, obviously has the cyber security angle. You also have on the fintech side, which is a little unique, I think, with the BFSI industry, is the linking to the national ID, right? In India, we have Aadhaar, in other countries, you have other IDs. What are the pros and cons of that? There are benefits, but there is the impact of traceability of what you do with your money around the world. And then you have areas like open banking as well. Now, in this entire fintech space, there are a couple of things that I didn't cover in the last slide on purpose. One of the things that I want to touch upon is cryptos. So how many of you have invested in cryptos? By a raise of hands. Nobody? I don't believe it. Okay. Somebody in the family? Yeah, okay. So now crypto is a very interesting space. Look at that as a case study. Like, what's happened? RBI said we should ban cryptos, very clearly. The Supreme Court has come in and said, no, you can't ban cryptos. Those are, some sort of assets which two entities are trading between themselves. There is no harm to the society per se. So just like we could sell a chair, a painting, you could sell any asset that you have. If there's a buyer and there is a seller, and there's a marketplace, who are we to stop it, right? So now, because RBI is not keen to regulate cryptos, because it's a whole new ball game, there are a lot of considerations to be taken there. We live in a regulatory sort of a quasi vacuum when it comes to cryptos. Right? What does that mean? You have a lot of confusion. Serious players tend to stay away from the crypto space in India. in many cases, simply because you don't have the Tatas issuing their own cryptos. For example, right? Tata New could have been a cryptocurrency. Right? They've issued coins, and they've not gone and issued a crypto. Whereas a lot of companies who may be more comfortable with taking more risk will get gravitated towards a space like crypto. So there's an adverse selection problem. Right? Those who potentially should not necessarily be dabbling in something which is high risk because they don't know how to handle risk are getting attracted towards a space like crypto. And those who should possibly be actually looking at it are staying away from it because of lack of regulatory clarity. So this is a classic example of why regulation is important. Let us take a hypothetical example. Let's say tomorrow the government of India appoints a regulator and says this is a crypto regulator and these are the regulations and directives and guidelines as to how cryptos will be governed in India. There are guardrails, there are protections for consumers, but the rules are clear. What's going to happen? A lot more serious players who have interest or desire are going to gravitate towards cryptos and start companies in the space, right? Whereas that would sort of crowd out the non-serious actors. And overall, if you look at it, the space will mature because the reality of it is cryptos are something that people are investing in, right? And a lot of the people who invest in cryptos don't understand cryptos. The other example I'll take is what's happened with the loan apps, right? A lot of companies have started loan apps. These are not regulated NBFCs. They're starting apps. Some of them are, allegedly funded by Chinese companies. A lot of gullible people have fallen prey to taking loans through these apps in India. This has created a scenario where, you've had suicides. You had, I think Hyderabad has also witnessed some of these incidents. Very tragic. Again, the regulator is now stepping in. Could the regulator have maybe done more earlier? Possibly. Could Google and Apple have done more? Definitely. Because a lot of these apps are actually hosted on a Google Play Store or an Apple iStore. Right? Potentially, those companies could have done a lot more, in my view. But I think we all live and learn. So again, regulation has a very important impact on society. Next slide, please. So I'll just quickly go through what RBI has done over the years. RBI has done a great job. If you look at it in terms of regulation, it's known worldwide as one of the best regulators, best central banks, if not the best central bank. But if you look at the chronology of events, with the economy opening, I'll touch on the financial crisis in 2007. I was in the States, spent some time in the UK and then came back to the States. The regulators ended up, sort of waking up after the horse had bolted off the road, right? So one of the aspects that I want to touch about regulation is regulation should be counter-cyclical, right? So when the economy is exploding, historically what's happened is regulators have turned a blind eye or looked at the other side and said, okay, things are going hunky-dory, let that carry on. May 1,000 flowers bloom. But that's the time when you actually rein in things. And when the economies are shrinking or economies are in a recession, that's the time where regulation has to come in and allow for more innovation, has to be more open and act as a catalyst. So that's where I would link it to what I was talking about, regulation being a tax. Happy to share more research that I came across from University of Chicago on the counter-cyclical nature of regulations and why that should be there. I'll share my coordinates at the end and happy to talk about it. NPCI, again, a lot of you might be aware, NPCI is an office here, huge office, huge center rather. NPCI was born out of RBI's initiatives, right? Brilliant. UPI is like the baby of NPCI in some ways. And we all know what a big success UPI has been. But another area where, possibly RBI has been able to manage it now and manage it well. But if you look at the IL&FS collapse, more than 1 lakh crores of NBFC debt. Again, one of those areas where everything was hunky-dory, people weren't really paying enough attention, risk was getting developed, was getting concentrated, and eventually it sort of was a mini bubble that exploded. And now we are talking of account aggregation in OSIN. OSIN is the Open Credit Network, which is like a UPI that's being created for credit. So a lot of innovation is coming in from RBI. Next time. So coming to fintech versus banking, the way at least it works in my view is banks typically have been over-regulated, focus essentially then more on consumer protection. Fintechs on the other hand have potentially been under-regulated, focus more on experience. The intersection of two is where you have your RBI and RBI regulations coming in, right? What's required is a lot more collaboration. You need potentially, I think RBI has also started a department of fintech this year. It's a very welcome move because again it creates guardrails, clarity. Some of the recent regulation that has come in on prepaid payment instrument issuers, for example, where credit lines can't be offered on PPIs, is also a very interesting way of RBI preempting something which is going out of hand. Happy to talk about it during the Q&A later. But some of those initiatives are potentially the ones which have been taken before the horse, bolts off the stable. Next slide. So again, what are the key considerations here? You've got data, you've got business model feasibility, you've got differences in regulation and supervisions. Very important point. There are regulations and who's going to supervise it. RBI has a great point. Multiple times they've highlighted that, hey, look, we can't be the supervisor and the regulator, but so far the government has entrusted in RBI to do both, right? And what are the regulatory boundaries for a particular industry? Very important for whatever industry that you're operating, for you to understand that and operate within it. Build enough governance structures within your orgs, right, on a board level and at multiple levels. And especially in a fintech and a BFSI and banking, financial services and insurance environment, a risk governance framework as well, right? So, in effect, regulation is has an impact on innovation. Regulation has the guardrails set up. It provides equal opportunity, protects weaker sections of society, also provides you quality assurance. Right? If anyone of you buys gold, if there's a hallmarking that happens on gold these days, that's sort of a regulation that's coming. Right? But all in all, if you ask me, with regulation, less is more. What we need as a nation, and I would argue worldwide, is more innovative regulations, regulations which will foster innovation at the same time, act as a balancing lever, and responsible regulations, and lastly regulations which are tailor-made for India. Yeah? Next, please. That's it from my end. Happy to take questions. Over to you, Rajiv. Thanks. You want this?
Sector, I joined the sector at that stage. That time we were all wondering, how was LIC operating, what control did IRDA have on LIC. So we were cursing IRDA that get this approval and so many things to ensure we function as an insurance company. But we realized, as the journey started after the credit sector came in, there was mis-selling, there was people were promising double returns, and, consumers were getting fleeced, unit-linked plans came in without any support of regulations, and that really opened up our eyes. We are all part of the same system, and we realized the regulator had to intervene to put in place a system so that consumers don't get cheated, consumers don't get fleeced, particularly the weaker sections whose hard-earned money, the agents would go and say that, listen, you put money here and you will get double the returns. So when the markets were doing well, some people made good returns, and that promise continued, and a lot of mis-selling also happened because of that. So why regulations, I guess, has been very, very clearly demonstrated, and I think that has been the journey of insurance regulations in the last 2 decades. So I would say that insurance regulations has been a boon, rather than a Bane, and I think it has really supported the industry. It has supported the cause as to why insurance industry is important, why penetration levels in India were so low, and how do we increase penetrations, at the same time keeping in mind the interest of the people. IRDA Regulatory Sandbox is one such initiative by the regulator where the sandbox was created to support startups, to support insurance companies and intermediaries to come out with new innovations and ideas without getting impacted by the existing regulations. So sandbox technically means that you can have new ideas and new ways of doing things, and you can submit those proposals to IRDA. IRDA will review as a regulator and allow you to experiment those projects without the existing regulations impacting. And that created a lot of innovation in the industry. I think today, first time when this was introduced in 2019, I'm told there were about 60 approvals, 35, 15 and 18. I think it happened in 3 phases. And 2021 it was extended for another 2 years. I think innovations like, for example, if you're driving a car, if somebody wanted to say that you pay premium as per the way you, depending on how you drive your car, depending on the usage of your car, rather than paying a flat premium. So that was one way of doing it. Wellness programs by insurance companies to monitor your health was another trial and error which happened during this phase. So a lot of good innovations came in, and I think because seeing the success and seeing the reason behind retaining this was extended in 2021 for 2 more years, and I think this has really helped the industry in a big way. Currently, insurers are using it, insurance intermediaries are using it. Intermediaries, the only condition is they have to use this along with the principal insurer. They cannot do it alone because they don't make products, right? They work with the insurance companies to make products, but they still can come out with innovations. If they have a principal supporter as an insurer, I think this will stand out. This is just the process. I think anybody who wants to apply for a sandbox approval, I think these are the people who can, these are the areas where you can certainly look at innovation. It could be a product innovation, it could be distribution, it could be underwriting. Underwriting, if you all remember, at one point of time, used to be a 2-week affair or 3-week affair. You apply for a policy, and by the time somebody got his policy sanctioned, it used to be a couple of weeks. I remember in SBI Life, when I joined in 2004, after moving from Kotak, we used to have proposals all over the ground floor, and it was, when will the proposals get cleared? So customers will apply for policies, and the files were lying all over the floor because the system and the methodology to underwrite a proposal was time consuming. There was no innovation around there. So from there I've seen a journey of everything getting scanned, everything becoming online. Policy and claim servicing is another area which today is well integrated. If you look at insurance companies today, most APIs of insurance companies are integrated with utilities. Policy Bazaar, for example, it distributes products of all insurers, life and non-life. And I would say 90% of the APIs are integrated with the insurance company. So whatever we do is live, whether it is claim settlement, whether it is initial application of the customer, whether it is any event which you do with the customer is online. This is all about the process. As long as you meet these guidelines and you want to apply for a sandbox approval, that is certainly available. It has been extended for 2 more years, and this just talks about the process. I don't want to bore you with this. This presentation can be sent for those who are interested, or if you have any questions specifically, I can address them. We go to the main one. So here I wanted to cover what has IRDA recently done. We have Mr. Vishesh Panda, who was earlier the finance secretary, who has now come as chairman IRDA. And from the day he joined, I think we've seen some kind of actions happening in the regulations. So a couple of things which will be interesting for us to understand is he's come with a clear message of insurance for all. I mean, though in India, insurance penetration today is closer to global numbers as far as life is concerned. I think the global penetration is about 3.4, 3.5. India is 3.2, approximately. It had dropped over 2.4 in between, but it has gone back to 3.2. On the GI space, we are just about 1%, whereas the global numbers are about 4% plus. So I think here the message is very clear that he wants insurance to be available to everybody. So what has he recommended? He has recommended that how do we reach out to rural markets? How do we reach out to villages? How do we reach out to areas where even companies like LIC have not been able to penetrate, or even the GI companies have not been able to penetrate. So he is recommending, new insurance players who can set up, insurance specifically for covering a rural market in a particular state, and such approvals will be granted, very fast. So that way we'll be able to, cover people who are not covered in these markets. Make affordable products. Premiums of these products will be much lower, which people can pay, but at the same time take a coverage. It could be a health cover, it could be an investment cover, it could be a term cover. The whole idea is, can we reach out to everybody? Another interesting thing which he has done is, earlier every company had a quota of how many products they can file. So in a year, I think it was some 6 or 5 products each company would file, and that would take months for the regulator to review and approve such products. So that was killing innovation, because every customer has a different need, every market has a different need. And a lot of representations used to happen to the regulator on this area as to how can we improve this. So one thing Mr. Panda has done now is he has brought in product file and use, which means as long as the company's board has reviewed the interest of the consumer and designed a product, it can be launched without taking regulatory. So it's called product file and use, and that is going to create a lot of innovation in this market. So as an intermediary, Policybazaar feels that having dealt with about 30 million customers, and of which about 15 million have bought policies, we have statistics of what people need. For example, a couple of years ago, none of us would have imagined that one can buy a 1 crore health cover at a reasonable price. Right? I mean, if you were working in a company and you had a 5 lakh cover, it was a family floater, and you were all managing with that. But what has this new innovation done? You could go and buy a 1 crore insurance cover. If you already have a corporate cover, it brings down your premium to some 400 rupees a month, depending on your age where you are, about 20,000-30,000 rupees you pay, and you will get a 1 crore cover for yourself, covering all major diseases. The other is, fast track approvals for investment proposals. So all proposals which were getting stuck, today the regulator has gone ahead and set up, special desks for the approvals to take place. He is very keen on digitization of the entire industry. So he has supported InsurTech industry in a big way, and he wants a lot of InsurTech industries to emerge, to come. He wants new players to come in. He wants digitization to go all over the industry, and that would help speed up the entire process, smoothen the experience, and be more transparent. We had our life insurance council and general insurance council, and probably you're aware of this. These councils used to be the representation body of the respective insurance companies. So life insurance company had a body called Life Council, and GI Council had the representation of GI companies. So these were functioning more like people used to meet, but it had very less say. I would say it didn't have so much of say, while a lot of representation would take place, but I don't think they could meaningfully get things done easily with the regulator. It took a lot of effort from their side to be able to get that done. But today, I think the idea is, can we revamp this? Can we give them more teeth? Can we make them more powerful? Can we have industry players leading these council bodies? Rather than government nominees, can we have people who understand insurance to be able to lead this? And regulators themselves have taken this step. I think the member investments today has come from private sector. He was in the mutual fund industry, and Mr. Joshi has joined IIT, and I think that is what is happening in the industry. They are trying to bring people who understand the subject to run the regulations, to run the councils. This is, if somebody is interested, he has recently announced that if anybody wants to set up an insurance company, you don't need to invest 100 crores. If you have a clear cause of reaching out in Telangana, the rural population of Telangana, you right proposal, I think with much lesser capital, you could get an approval in place within 6 months. I think he has promised that. And he's very keen that entrepreneurs come forward and set up such insurance companies in different markets so that you go deep rather than trying to be everywhere in the country.
Our programs are linked with that policy. But I see that there is, maybe that is regulatory, I'm trying to understand actually. There is one segment of people don't get covered. For example, I am from Media Entertainment Skill Council of India. There are these stuntmen who are, are not covered. So I am here actually representing them because when I go, I tell them, aap log you're not eligible for this. So I just need a small answer. So how, on what basis, maybe I'm sure you have certain regulatories to take care, but is there something what you may think for something like that? Maybe one is for dental and one is for the products. So
companies have come out with specific products through innovations and pricing. Coming to the second part, was not covering certain segments, be it Pradhan Mantri Yojana or be it I think the risk involved in certain jobs are so high that some segments are, again, like health, it's also said, stuntmen, the chances of probability of a death or probability of an accident is much higher. And that is the reason why some of these segments today are not being picked up by insurance companies, not because regulations don't want them to do it, it is to avoid higher claims, is what currently the insurance companies are. But I guess, there is no reason, as I again told you, I don't know when the stuntmen will get covered, but I think there are a lot of areas still which we don't cover. At the same time, the ecosystem is such, in a country like India, you have false claims. So a lot of areas, particularly in states like Haryana and some pockets of Rajasthan, you have fake snake bites cases, you have fraudulent claims of dead bodies being laid on the road and a truck claiming a third-party insurance. So a lot of such things which are happening. I think the whole system has to change. If genuinely insurance should be made available to everybody, then I think this is one area which we have to work very hard. Frauds in control. A couple of months back, Policy Bazaar has faced frauds from 4,000 people who covered their trucks as two-wheelers. Why is that? Because the premium which you pay for a third-party truck insurance is much higher, and the premium you pay for a third-party two-wheeler is much lower. So all you do is give you a vehicle number, and you say it's a two-wheeler, but you're trying to meet the compliance by covering those services. So obviously you're not going to pay those claims, but look at the system. What can Policy Bazaar do? It needs access to Vahan data.
Correct.
Today, the Vahan data access is not available to intermediaries. So we are working with the government to say that we should have that access so that such fraudulent claims can be addressed. So I think the whole ecosystem will need to be working. But trust me, there is a positive trend of covering areas which are not getting covered. There is an opportunity in each area, but at the same time it has to work along with the entire ecosystem.
Thank you.
Anybody else? Sorry, we can take one. Anybody else?
Oh, sorry.
Sorry, so the Supreme Court as well. So
That's,
no work
that's
together.
one more reason why regulations. I guess.
That's it. That's what I'm just trying to prove.
So one small banks and as far as the insurance is concerned, like in the sense like if I'm having an OD or a CC account or something as such, they try to extract good policies out of it. So are we doing something in that regards, like anything to control or put a check? Because even like they organize competition among the staff members in the banks by calling them as an educational program from Kotak Mahindra or something, Kotak Insurance or something, and they just push forward the policies.
So my first answer to this is absolutely wrong. I mean, most banks today, the employees present in the bank should be. Earlier, mis-selling used to be there with agents, and agents used to do a lot of mis-selling. We expected banks to probably play a different role. So I think, being from the insurance industry, my wife gets a call from my own HDFC Bank branch, and somebody says, you you can invest in insurance policy, it will double. So, not knowing that I belong to the insurance industry, So it's important that that has to come from within. I think both the distributor and the insurance company, it cannot be only driven through numbers. That the mis-selling needs the highest action. If found, the employee gets terminated. We did that for agents. We did that for a lot of employees of the company. I remember in SBI Life, irrespective of how good your performer was, if there is a complaint of mis-selling from a customer, on investigation, the employee and the agent both were terminated. I think that has to come, within the system. It has not got to do with the regulator. The regulator is not encouraging mis-selling. But if complaints are raised, so if you are going to a bank for an OD limit, sometimes you keep quiet. Because they say, policy le lo, aapko fir OD limit mil jayega. You can put your foot down and say, listen, I have come for OD limit, not to buy a policy.
Okay.
But you are forced to buy an insurance policy because you think, agar main nahi lunga to mujhe OD limit nahi milegi. Sorry about the Hindi in between, that if I don't buy an insurance policy, I will not get an OD limit. So somewhere that resistance has to come from your side, very clearly saying that, listen, I don't want an insurance policy. If you don't need an insurance policy, you don't need to buy one.
Just to add to like you said, right? You also have recourse with the banking ombudsman, which RBI has set up. You also have ombudsman managers or appointees, which you can easily find out in any bank website, who are appointed specifically to address such scenarios. Plus, you have consumer protection forums. So you have essentially, along with IRDA as a regulator, you have your banking ombudsman and you have a consumer protection forum. So, as Rajiv mentioned, we would actively encourage you to go ahead and reach out to these forums and make those complaints. India over the last maybe 20 years has changed a lot. These kind of forums were very dormant earlier, right? You had to put in a paper application, it was really painful. Now it's fairly straightforward, it's online, and you do get redressal. So again, encourage folks to take advantage of these platforms.
I can certainly, we ran a company called which is exactly doing what I ran a startup for 3 years. Instant remedy to consumer. Thank you.
Thank you so much.
Thank you everyone for joining this session. You can break out for lunch. So for all the employees, the lunch is on the ground floor.